Welcome to another Coffee with Samso, where we speak with ASX companies and we talk to the guys who run the strategy. We're here in Sydney, just post RIU, and I've got Paul Locke back from Pan Asia Metals, who has a lithium project in Thailand. The ASX code is PAM, P-A-M. I think market cap currently is about 71.8 million, and from the last quarterly, the cash is about 4.4 million. Paul, welcome back to Coffee with Samso. It's been a while. Can you give us an update, or how are you and how's things been happening?
Good, Noel. Thanks for having me. Pan Asia Metals is going really well. Just on the cash, that's 4.4 US, so it's about 6.
Oh, okay. Yep.
Important.
Yes, it is today.
Yes, yeah. So it's going really well. It's been a year since we spoke, and we've been drilling that entire time. In fact, when we last spoke in May 2021, we'd been listed for about 6 months. On the day we listed, rods were turning, and they've been turning every day except for maintenance days since then, and they still are. So we're on track to deliver a mineral resource estimate this month. Our aim is a mineral resource estimate which will allow us to deliver around 10,000 tonnes of lithium chemicals, or LCE, for at least 10 years. And we're going to be pretty close to it. We had to create a cut-off date on the mineral resource. We've got 20 holes after that date, so there'll be an exploration target at Riongkiet, and then the other prospect at the Riongkiet project called Bangi Tum, there'll be an exploration target there. So I don't think we'll have any trouble achieving our goals. Then once we do that, we're going to continue drilling and expand.
Okay. And just so that people understand where you are geographically, you're on the peninsular part of Thailand, on the southern side.
That's right.
Yeah.
That's right. So we're about 30 minutes north of Phuket Airport, in the province called Phang Nga, and we're probably around an hour's flight from Bangkok, and most importantly, just southeast of Bangkok is the Eastern Economic Corridor, where there's a lot of industrialisation.
Okay.
So in the global peer group, we're one of the most strategically positioned lithium projects because all of our inputs are on our doorstep, whether they come out of Malaysia or the Thai industrial sectors or elsewhere in Asia, and our market is on our doorstep, and that's the Eastern Economic Corridor in Thailand, where there's a big push in LIBs and EVs. So just to step back a bit, Thailand is the 4th largest auto producer in Asia and the largest in Southeast Asia. They've got a very comprehensive EV and battery policy because they want to retain their market position. So there's a big push in Thailand for EVs, so Thailand can retain that number 4 position. And there's so much interest in our project that later this month we've got a delegation coming down from Bangkok comprising of high-level representatives of the Ministry of Industry, including the Deputy Minister, and also from the Department of Primary Industries and Mining, which sits under it. So there's a lot of focus on our project and what it can do to deliver into the Thai vehicle supply chain.
Okay. When we first spoke, 12 months ago, as you said, the part that intrigued me was exactly what you just described there, because in our industry, it's all about deliverables and where is your market. You don't have to ship it from, thousands of kilometres, hundreds of kilometres. You're literally at the doorstep, which is what I wanted to emphasise in that first conversation. How has the market reacted to this? Because you are one of the few where your resources actually, as you said, in the doorsteps of the corridor. So everyone may or may not know that Thailand is one of the biggest car manufacturers in the world at this point in time, right? I think even BMW's over there.
Every brand, just about every brand is in Thailand.
Yeah. So how has the market reacted to that in terms of, you've had too many conversations in some ways. How are they reacting to that? What's their narrative?
I actually think the market, we're still relatively unknown. If you look at us in the ASX lithium peer group, our valuation is quite low compared to some. Part of that is because of the mineral resource. We haven't got one published yet. But when I look at the global peer group and the dynamics of the lithium supply chain, so from concentrate to converter to batteries, most projects are restricted to concentrate sales, and that's part to do with geography and cost. So when we're in Southeast Asia, and the reason we're in Southeast Asia is we want to be competitive and we want to be nearby our consumers. So it's all about a project which is low on the cost curve, so we can ride out the market cycles in the long term. And we've got to remember that while investors generally look at short-term price cycles, we've got to build a project on long-term price cycles because it's got to be bankable. So no bank's going to come in and bank a project because today lithium is worth this much. They'll look backwards and say, well, it's probably going to be worth what it was 2 years ago soon. Mm-hmm. So always need to keep that in mind. And we're also looking for opportunities where we can value add. So our view is that projects where we're delivering a mine gate product means that we get caught up in the commodity cycle. Whereas if we can go past the mine gate, we should be able to maintain margin in what we're producing. So we're very focused on downstream opportunities and what we can do with our concentrate that we produce.
Okay. So if we take a step back, you got your mineral resource estimate coming up. For those guys out there and says, well, okay, what could that number be? Is there any issues with the resource, the geology, the deposit, whichever word you want to use, and can these guys deliver that, right? I mean, you've already done the drilling, as we know, and we've seen the analysis, the numbers. They look like they're stacking up. How is that process? I mean, can you sort of just describe to us, is there any issues or how you've counted those issues? Because nothing's ever a smooth journey.
Well, so investors are used to seeing companies publish drill intersections and cross-section with that. And one of the things I always look at is width and depth. So, if you've got in our case, a pegmatite, which is deep below surface, you've got to get there somehow. And that's your first barrier. So at Rion Kiet and Bangitum, our mineralisation is from surface. And we've got width. So it's not just a thin pegmatite, which is going pretty deep. It's nice and particularly at the southern end of Rion Kiet, where we've got nice broad system, it's going to be amenable to open cut. So there's no problems there. Very early on, we did some rougher concentrate work on our oxide zone. So in some areas, the oxide zone is going to create a problem with you. And our oxide zone is up to 40 metres deep. So can it be processed? And our rougher concentrate work we did in Australia in 2019 gave us about 94% recoveries to a rougher concentrate, so first phase of over 2%. And then you just got to clean up the concentrate. So there are no issues with that. Right now, we're getting met work done with Bigram in China, and the results are looking good. It's what we want. The reason we chose Bigram is, in Perth, we have several people who can do the work there, but there's a huge backlog, so we're trying to avoid that. The other thing is, in China, there are 6 lepidolite/muscovite mines operating. 4 of those are downstreaming into lithium carbonate. So the knowledge is there to produce a concentrate. So those boxes are ticked. So really, to answer the question, there is nothing sitting there that we can see which would suggest a black mark at this point. It's all looking very good.
Okay. It's good that you point out, I mean, the fact that they've there are already processes in place, right? Because if we take your company and go back to 2015, 2016,
Yep.
All sorts of talk about issues with lepidolite, mica type things, whereas I started hearing things like the Chinese are trying to crack it and they've fixed it, or whatever that process may be. But I think from what you're saying is that that's not an issue anymore as opposed to before.
I think, so when the lithium market first started, you naturally gravitate to what's easiest to see and do, and that would have been green bushes and spodumene.
Yep.
So you want to produce lithium from hard rock, you've got to do what green bushes is doing. The knowledge of what was happening globally in the lithium sector was very limited. We didn't really, or people didn't really know what was happening in China. So that's one factor. The other two is back then there was no real demand on lithium. And so when there's no demand, there's no focus on cost structures and stuff like that. So in some cost curves they had lepidolite out at the far right side, but I think those forecasts were incredibly inaccurate. And with this increasing demand, there's been an increasing focus on extracting more from less, and so we see the cost structures start to tighten up and look better, and that's what's happening in China.
Okay.
So,
Okay. Yeah. I mean, look, I'm one of those guys that was thought, mica, lithium is harder, etc., etc. But I think my views have changed dramatically over the last couple of years, where I started to hear, and especially after our first conversation, right? And I did some research into it, and it's probably one of the lithium products now, if you want to call it that way.
Yeah, there's not outside of China. So there's a lot of micas being processed in China. But if we look at our peer group ex-China, so we've got Lepidico with their project in Namibia. Their resource grade is 0.43. They're going down a hydromet path, and their DFS shows that they would be at the bottom of the cost curve at about $3,200 a tonne US on an all-in sustainable basis. And then we've got the Sinovac project in Czechoslovakia. I think their grade is around 0.6, very large but underground project, and they're under $5,000 a tonne. But it's a low-grade project with some tin and tungsten credits, if I recall correctly. So it can work. Sometimes I hear, I was actually talking to an investor several weeks ago, and out of the box, the comment was, we're only interested in tonnes and grade. And I had to explain that, there are some projects out there with the biggest tonnes in the world and the highest grades, but they're not the most economic because they're landlocked. So it's not about tonnes and grade, it's about geography, it's about what you can do with your product and your cost structure. And tonnes and grade are great. If we had, Greenbushes grades where we are in Thailand, it'd be fantastic, but we don't. But we can still be very, very competitive.
I couldn't agree more. I think it's very, very much market-driven focus. Take the kaolin market, right? We know there's heaps and heaps of kaolin in WA, but it's never been dug out of the ground because it doesn't make money.
Yes.
Right. Yeah. So I think that if that was next to a marketplace like a bit like yourself, it's a different conversation.
Yes.
Right? So, and we know kaolin's a big market, right? Although there probably is a change in the market for that as we speak. But I want to get your opinion on my lithium narrative, which I'm learning day to day, is that I have this saying that there's not a shortage of lithium in this world. However, there's a bottleneck. That bottleneck is the of the processing part of it. And I said that's why it makes it so valuable in that sense, in creating the supply issue. Am I on the right wavelength?
I think the processing of concentrates is an expensive or capital-intensive part of the supply chain. So when it comes to capital and commitments, anyone wants to make sure that the market downstream of them is solid before they commit that capital. So as we move upstream to concentrates, there's a lot of concentrates in the ground, Several years ago, we did an analysis of hard rock and brines and their JORC resources in the ground, including inferred or the equivalent of JORC. And in each case, there was over 100 million tonnes of LCE. There's no shortage of lithium in the ground, but it comes down to economics. And one reason why we want to move downstream, and we're angling for that, is what I see is that as commodity markets rise, the easiest hurdle to cross is at the concentrate end of the game. So I expect we'll see concentrates start to get overproduced. But if conversion capacity hasn't increased in line with that, we're going to get too much concentrate in the market. And downstream of that, that's where the money will be made. Okay. And that happened in 2018 and 19. Conversion capacity was still there, but there was just too much concentrate in the system.
Okay. Well, I mean, when you go down the downstream side that you talk about, are you guys going to be the primary player, or is that you're going to be one of your primary part of your business, or you're going to go down the co-op and work with partners?
So we're doing our network now on producing lithium chemicals, so lithium carbonate, lithium hydroxide, maybe even lithium phosphate, and and that all is stacking up, and we can do that in-house. So similar to Sinovac, although the Czech government went 50-50 or 51-49 in that project, and Lepidico, we can own the conversion to a lithium chemical. Further downstream is the cathode active materials part of the supply chain, and that's what goes into the battery. And where we are exploring avenues to joint venture at that part of it. So when I look at the global market right now, having your foot on lithium supply puts you in, or potential lithium supply, puts you in a very advantageous position. And we can see that when we look at all of the concentrate producers, Liontown, Core, PLS of course, and some on the brine side, they're all entering into MOUs for the supply of whatever they're producing at the mine gate. If we have our foot on that supply of lithium chemicals, then we're going to attract the interest of parties who want to produce CAMs, and that's where we'd like to get to.
Okay. So are you saying you want to get to the mine gate and then?
Oh no, we're not going to be selling a concentrate.
Oh, okay.
Yeah,
okay.
We'll be producing a lithium chemical,
okay.
And then with that chemical, we'll joint venture into other production.
Yep. Okay. So, I mean, this is a crystal ball question, I guess, in some ways. You're in the lithium space. How do you see this going? How do you see this playing out? At some point, is there going to be a tapering off? Are you guys? Is there a lithium replacement in place? Because there's all sorts of conversation happening, right? So, but they'll all sort of throw a few words in the air and let it circulate. What's your thoughts?
Lithium, being the third largest element, is essential in battery technology. There's been a lot of conjecture around battery tech which could surpass lithium, but it's all beaker scale stuff. And there's never really been any development past that. I think we're a long way off from seeing a direct competitor to lithium in batteries from the reading that I've done. So there could be in a number of 10 years or something, but the development process takes a long time. So if you look at lithium batteries themselves, the first lithium batteries came out, I don't know, was it 30 or 40 years ago, on scale, in hand tools and stuff like that, and there's been no replacement. And that whole development cycle has been occurring over that period of time. So I don't think anyone's really going to step into the market with a new technology today and usurp lithium at this point.
All right. PAM's considered a small company. There are bigger companies and the middle guys. How do you see that being playing out? Is there going to be, do investors that look at you and say, oh, maybe I should put my money in someone bigger, more stable, these guys will get played out? I mean, how does that conversation, what are your thoughts about that conversation?
That's interesting. If we look at a company producing 200,000 tonnes per annum of concentrate, in your eyes, is that a big company?
I don't know.
I think it is.
Yeah.
If we look at the price of lithium and the price of concentrate on any one day, whether it was 2 years ago or today, you'll find that if you produce 10,000 tonnes of lithium chemicals, the revenue that generates is about equivalent to 200,000 tonnes of concentrate. So while Albemarle and companies like that are super big, and Levent, and they are like gorillas in the marketplace, when I look at our company compared to our peers on the ASX, and some of them are valued quite highly, and if I look at what they're doing, which underwrites their valuation, I only see opportunity and upside for a company like Pan Asia Metals.
Yeah.
What we're trying to do is build a company with really solid foundations. So the scariest thing I find in the market, Noel, is the market cycle itself and being unprepared for it. So this is why we really want to turn the company ultimately into a chemicals company. And so we're focusing on re-enquête, on downstream production of lithium chemicals. We're focusing on securing other projects. So since we last spoke, we secured the Katatong project about 30 k's to the north. That's a combination of hard rock, lithium opportunities, and potentially geothermal. And we've been looking at several other opportunities in Asia. So we want to build the foundations, which is geographically diverse, but still in the centre of industrial central in Southeast Asia. And I think with that, we're building into the company longevity, and that's where we get those solid foundations the company can ride out future cycles.
Okay. One of the sort of playing devil's advocate here in this question, a lot of investors or viewers out there, they're used to putting their money where their mouth is and things like that. They're always very shy about outside of Australia because we're so incubated. Yep. We're like cocoons, right?
Yep.
So when they look at stuff, because they're going to have a jurisdiction problem.
Yeah.
How do you counter that thought?
I can understand where they're coming from. We all feel safer in and where we know. So operating in Australia is really easy. But that said, there's a premium for it too. So if I'm in WA and I want to look for ground, I'm crawling all over everyone else looking for ground. Whereas in Southeast Asia, that cultural barrier to entry opens up the opportunities for us. So, and then when we look at Australia and some of the events over the last couple of years, we see new and different styles of political risk coming into play. So for instance, Rio Tinto and the issue up north with the heritage lands.
Blowing up with the cave.
Yeah.
Yep.
That's brought in a whole new level of political risk. Everyone is focusing on that. Maybe up there people aren't, but investors globally are. Where we are in Southeast Asia, there are different styles of risks, but all risks are manageable. And at the outset of your project, every company in exploration and development should be looking at their project at the start and doing a doability test. Is it really doable? I look at a lot of projects globally and even in Australia, and they're not doable from the outset. It could be grade, geography, some other issue. So it's all about doability and making sure that you're positioned as best as you can with the project. And if at the outset you can't see that it's doable, you shouldn't be there. You just walk off and find something else. And we've dropped projects over the last 10 years for that very reason.
I think it's a very good topic because jurisdiction comes up when they're not in your home area, whether you're based in US, Canada, here, or Southeast Asia. But a friend of mine has said, no matter where you go, you have some issue, as you just described, right? Whether you're in the Pilbara, whatever, and it's about managing it. And I think the key is, as you said, is whether this thing can you do this thing?
Yep.
And those factors are there. And it's jurisdiction, just one of them.
Yep.
Not the major one, but it seems to be blown up as the one every time someone talks about something out of Australia because we're here. Right?
I personally think it's a reason not to invest. So they find a jurisdictional excuse not to invest. So investors often ask me, or will make a statement, we don't invest in Asia, jurisdictional risk. And I always ask, do you invest in Africa? And the answer is often yes. And I say, do you invest in South America? Yes. Well, their political risk ratings are all substantially lower than most countries in Southeast Asia, and particularly Thailand and Malaysia. So there's bias in there, and that bias is based on historical investing activities. In every country in the world, there's been nationalisations or mines shut down, and people have got to keep that in mind when they invest. We do, like most companies should, we spend a lot of time working with our community, working on social practices, which will make sure that we've got buy-in from our community. So in our last annual report, we put a stake in the ground on ESG. So we're working within the guidelines of the World Economic Forum's ESG guidelines, and also the UN Sustainable Development Goals. And our view is that today, with social media, with focus on projects, if you're not delivering a project which is accepted by the community, you're not going to be doing anything anyway. And that's how you handle those risks. In fact, sometimes I read some of these reviews about global mining and the best spots to mine, but they're all biased because they might say Australia, but everyone answering the question is largely from Australia, so it means nothing.
Yeah.
Everywhere there's risk, and you've got to be positioning your company to manage that risk.
I mean, I guess in some ways I'm sort of the best of two worlds. I've spent the majority of my life here, but I've also lived in Malaysia, where I was born. Things do work. I mean, they work as well as in Australia, and there are things that don't work and things like. But the whole risk factor, I think, is blown out because of the fear of the unknown. I think that's where it comes from.
Yeah.
When you understand and you see it for yourself, in the smallest outback of Africa, it works for a reason, right?
And to make it work, you need to be using and employing local people. So in Thailand, our entire team in Thailand is Thai, and we rely on them in navigating the cultural and political issues. So me marching around thinking that I know it all is a complete waste of time. And we do some work in Malaysia, and if we put our foot on a project there, we've got a Malaysian team lined up already to help us there, and the same with a lot of other countries in the ASEAN region.
I think it's basic business principle, isn't it? If you partnership, you work with each other. You're not the guy in a hat and saying, "You do this while I sit here." It works, right?
Yes.
If you did that here in Australia, I think you're going to have bad surprises as well.
Yes.
So I think it's just good business principles.
Yeah. We've seen companies near us over the years, and they're the fist bangers. They're in the minister's offices banging their fist, essentially saying, you need to give us this, give us that. And it doesn't work. They never get the outcome they want, and in fact they just create a new barrier for themselves. So you've got to be very culturally aware.
I have a saying, never argue with the guy in the uniform.
It helps.
Look, that's fantastic. But, going forward, what could the guys out there be, looking out for? What's the news flow?
Well, mineral resource estimate coming up. We're aiming for our 10,000 tonnes for 10 years minimum. If we don't quite meet on the mineral resource estimate, the exploration target will fill that bit of a hole, and people got to keep in mind that our mineral resource estimate is based on holes up to number 46. We're now close to 66, so there's 20 more holes to go into it. Some of those are infill. It's all looking really good. Once we've delivered that, we've got our met work happening. Those announcements will be coming. There'll be a scoping study later this year. Our scoping study work is feasibility level work, so it's real, and we can roll that straight into a PFS and DFS. We're also looking to we've got 2 rigs there now at Rion Kiet. Once we've finished our exploration holes for the resource, we'll be sending 1 rig over to Bangi Tum and starting to drill that out. So that's going to add. Then we've got the Katatong geothermal and hard rock applications in the process, and they should be coming sometime this year. We've been a bit delayed with COVID, but that's going to add to our ground, and the areas we've secured under the application are highly prospective. So ultimately I want to see PAM being a 20,000 tonne per annum lithium chemical producer. I talked about going past lithium chemicals, and we've had several discussions. Hopefully we'll have something to announce on that sometime this year. So it's looking really good for the company.
Yeah, I must, make a point here, because as we're talking, and I think the same thing happened the first time we'd had discussion. I'm drawing the picture, and and I'm seeing the picture, and obviously I haven't looked at the story intently for a while, and everything to me feels like it's in place, and it's a bit sort of flying under the radar in some ways. And you mentioned that you're looking in Malaysia. I'm thinking, oh, he's looking at stuff there, and I love the fact that you're geographically where you are, because you are literally in there. How do you? What could you add to that thought? Because to me, it's like you are definitely flying under the radar here. Why is that the case?
Look, I think one thing I don't want to happen with PAM, and I look at companies and there's a bit of a pump and dump, so they really get the share price pushed up and then it disappears, and you end up with a whole bunch of disgruntled shareholders. I'd rather see our valuation creep up lockstep with what we're doing, and I think that's happening. I can see us being quite a valuable company when I look at our peers, and we've spoke a lot about political risk, and many of those peers are in jurisdictions where the risk is higher than where we are. So I don't see that as a barrier at all. It just comes down to delivering the mineral resource estimate, and I think once we've got a mineral resource estimate and our market cap is around 100 mil, that will start getting a whole lot of interest from other investors, which are waiting for those milestones. So at the end of the day, in our peer group, we're one of the few explorers from the first bunch, from the 2016 bunch, which don't have a mineral resource estimate. Okay. So that's probably part of the reason.
Okay.
I don't think it's got anything to do with management.
No, surely not. I try and finish every time with, giving you that time to say, why PAM. I get part of that why PAM was what you've just said. So, do that shameless pitch within the guidelines of your corporate governance. What would that be to tell the guys that's saying, this is a great story, or should I not? Well, how do you turn them?
Well, when people look at Pan Asia Metals, they're looking at one of the few companies which will produce lithium chemicals. So most of the companies in the PE group are producing a concentrate, or if they're in brines, they will be producing lithium carbonate, but it's not battery grade. And we're one of the few companies, there's a few in Europe, which are based right in the network of consumers. We've also got buy-in from the Thai government. They want the supply chain, and we're positioned to deliver in that supply chain. There's not many other companies like that. So with Pan Asian Metals, you get a uniquely positioned company in its supply chain, or in the supply chain. The other thing people should be aware of is where we are. We've got the Asian Development Bank and other institutions which want to fund projects like this. So we'll be one of the few projects where there will be interest from funders to build the project. So I think investors are looking at a company which is uniquely positioned and with real prospects to produce chemicals.
Okay, right. Paul, fantastic. I think the conversation is as good as the last time we had 12 months ago or more. Look, I always conclude now. I've been working closely with Florence Drummond, who's started in Indigenous Women in Mining Resource Australia, and we've come up with a gift, or more, maybe she has, of coffee, since we are Coffee with Samso, and we present the gift to you guys as a token of accepting to be a victim of Coffee with Samso and putting your story out for us. And so thank you, and let's hope we continue the journey.
Oh, okay. And do I pronounce it Imarama?
I don't know, pronounce it.
Well, thanks.
All right, thank you.
Thanks.